Hey everyone, excited to be back for this week's edition of Frequently Asked Questions for Commercial Real Estate. In today's video, what I thought I'd do is talk about a concept that's extremely pertinent in today's environment in particular, and that is, how does inflation affect real estate values? Now you may be thinking, what exactly is inflation? Well, inflation is a general increase in prices and a fall in the purchasing value of money. Now this can occur for a variety of reasons, but primarily it's related to the increase in production cost, meaning raw materials or wages, or an increase in demand for a fixed basket of goods and services. Now, on average, over historically, the average inflation rate has been roughly 2 to 3%. And one of the best ways to track this average inflation rate is by being able to track the consumer price index. Now, the consumer price index is an index that follows a basket of goods. Essentially, it looks at a basket of goods that are purchased commonly in the economy and then tracks the average prices of those goods across the United States over a period of time. So as an example, let's say that a gallon of milk last year cost $2 and this year it costs $2.20. You can reasonably say that the inflation rate from the prior year is roughly 10%. Now, this is not an exact science, so I don't want people to harp on me on whether or not this is something that indicates exactly that we experience a 10% inflation rate, but it is a pretty good indicator of what inflation rate you have experienced. Now, why is this so important when it comes to commercial real estate? Over the last decade, or really a little bit more than the last decade, the US government and the Fed have been pumping money into the economy, thus increasing the supply of money in the economy. Now, what happens? When there's an increase in the supply of money in the economy and a fixed number of goods, in particular, let's pertain this to real estate, there's a fixed basket of goods, there's not an unlimited supply of real estate, there's a lot more money competing for those fixed basket of goods. So what happens? The price of those fixed basket of goods, or those hard assets, begin to increase over time. Now, over the last year, we have pumped trillions and trillions of dollars in the economy as a result of the coronavirus pandemic. Now, I'm not a politician, nor do I want to rant on any political, or do I have any political leanings one way or another, nor am I educated to provide any feedback as far as whether or not that was a good idea or not. All I will say is that since there has been an influx of money pumped into the economy, my prediction is that over the next couple years, we will experience a decent amount of inflation. What does that mean? That real estate prices will increase as a result of the decisions we've made over the last few years. So I'd love to hear your feedback on the video. If you can, provide the comments below to what you think is going to happen over the next couple of years. If you're in the market to buy commercial real estate, it may be a good opportunity for you to get into the market prior to this inflation taking place. If that's the case, feel free to reach out to me. My number is 502-536-7315, or you can reach me via email at Raphael@grisantigroup.com. Along with that, if you love these videos, feel free to like, share, and subscribe to this channel. I love providing awesome content related to commercial real estate, and I will continue to do so each and every week. So we'll see you guys next week, and have a great week. See ya.